Headlines say one thing, but the data says another. So listen, if you're like most people, you're hearing two completely different stories right now. The national media is saying housing is stabilizing, but the local chatter is saying that the transactions are down. So which is it really? Today, we're going to show you exactly what's happening nationally and right here in Metro Detroit. From the latest national release, it says that U.S. existing home sales are up 5.1% month over month. I mean, that's a good thing. To me, that's a signal that buyers are getting busy again. When the home sales are up, it means buyers are getting busy, right? It's been really low. So that is actually up almost 1.5% year over year, which is really good. We've got an annualized pace at 4.35 million homes, and that's the strongest pace in nearly 3 years. So why is this happening? Why are we pacing? Why are there more transactions happening? Seems that we've been bottlenecked for the last 3 years, which it seems like that because we have been, if we're being honest. What I think it is lower mortgage rates coupled with slower price growth. And that's what's making the buyers really come back. And I'm going to ask my good friend John, since he's the mortgage expert, what he thinks about this.
Yeah, I'm in agreement with you. I mean, what's kind of helping pour gasoline on this, just to what you broke down right there, is what we're seeing in the markets. Over the last 2 weeks, we finally saw mortgage rates dip into the high fives as the 10-year treasury moved closer to 4 and CPI inflation looked like it was cooling. But this morning, as you may have seen, stock markets are tanking a little bit because we got a hotter than expected producer inflation report, up a full 0.5% in a single month for January, which tells us inflation pressure isn't completely gone behind the scenes. So, what does that mean? I mean, the Fed is likely going to stay patient, in my opinion. Markets may push expected rate cuts out a little bit further, and what that means is that rates can still absolutely move in either direction from here. Yes, while we have improved, I think volatility is still the story. So if you're trying to perfectly time the bottom in rates, you could miss opportunity in the housing market. As we know, strategy beats timing.
Yeah, it's funny. You and I were just talking about the stock market and trying to time that is like, I'm trying to time it myself, but there's no guarantees in life. There's no crystal ball. If I knew the real answer, we probably wouldn't be sitting here. I'd be on my own desert island.
Wish mine was shinier, feeling murky as of late, but I think there's good opportunity on both
Volat
ends.
Yeah, volatility is really the major theme right now. It's volatility, right? It's like 1 week, CPI, GPT, or GDP, all the signals, employment, everything is good 1 week and then down the next week, and it's very volatile, and that's what's happening. So it's really hard to time anything, I think, right now until we really settle in. And we're seeing like different stats across the nation right now. So sales rose in the South, and then in the Midwest, we really kind of held steady. And then in the Northeast, sales actually declined. So we're seeing different things in different regions, but nationally as a whole, I don't think we're collapsing. I think we're just recalibrating. What do you think, John?
Yeah, I mean, I think we're right there. It's recalibrating is right. And I was on a Zoom call yesterday with Barry Habib and a few others. Got the opportunity to have some close time with him, and he was breaking down some really interesting stats. And as you mentioned, it seems like anywhere warm is a different market. It zoomed in on the Midwest and Michigan and especially Illinois too, just available listings year over year, and then decline from back in the pandemic levels was the highest I saw in Illinois, 55%, not nearly that way in Michigan. But aside from that, just kind of dipping back into the market take, and we just spoke a little bit to this, and it's really interesting. The last two data points that we got should have pushed rates higher, right? The jobs reporting came in stronger than expected. Producer inflation came in hotter than expected. Normally, that combination is going to put immediate upward pressure on mortgage rates, but the market isn't reacting that way. The 10-year treasuries continue to drift lower. Mortgage backed securities have actually been improving. So I think investors are looking past the short term noise and focusing on the broader disinflation trend. So that tells us, I think, the next couple of weeks are critical because markets are trying to decide which story wins, the data or what people think is going to happen next, right?
Yeah, total agreement. Total agreement. In fact, we were just talking about that too. I think March is really going to be a pivotal month this year, to where we really figure out where the market's going, the real estate market, the stock market, pretty much everything, our overall economy. I think March is going to give us a lot of signals that point towards the direction that we're going to go for the rest of the year. You talked about Illinois stats. I want to talk about Metro Detroit stats. Interesting stats are now we're talking year over year for January. This is year over year stats. So closed sales down 12.7%, pending sales down 14.2%, but the median sale price is up 5.3% year over year. And this is the most important. The new listings down 8,400, down 5.3%. That's the key indicator for me is the new listings are way down year over year. The inventory is kind of evening out. Last year, I just felt like, we were at our highest inventory levels that we've seen in quite a while. So I'm glad to see that new listings are down. I really am. The homes on market, we've got about 19,000 homes in Metro Detroit on market today. Now, it might seem like a lot, but there was a couple months last year where we had over 25,000 for sale at one time. So it's kind of inching downward, right? That July, August, September market, they were all three of those months were 25,000 plus homes for sale in Metro Detroit. So it's creeping downward, and I like it. It's bringing us more balance. Average days on market is 50. It's up one day year over year. Transactions are down, prices are still going up. Inventories, it's sitting pretty steady, but the new inventory is coming out slower. So we're not exploding. It's definitely not a crash pattern. I think, and you tell me if you agree with this, John, but I think a crash pattern looks like volume up, prices down, inventory spiking hard, everything that we saw in our last crash. And we're just nowhere near like any of that. Maybe we're close on one of those variables, but we're nowhere near crashing as far as, our signaling goes. What do you think, John?
With that, yeah, not enough is kind of coming together with all the technical factors that we're accustomed to seeing to lead to that. It'll be interesting to see kind of how things continue to shake out here as headlines take over with rates going down lower and you can feel it on the buyer side. Everyone kind of starting to come off of the sidelines. And I don't know if you're seeing it in your market right now or what you think the time frame is, but when does that have the sellers that haven't done much and are waiting going, all right, the buyer demand's kicking up. Am I able to get more for my house? Is it time to actually think about listing when initially I wanted to wait a little bit?
Yeah, so we've had two recent headlines, rates, lowest they've been in 3 years, or, mortgage interest rates finally in the fives. And we saw that, I think, about a month ago. And then we saw it last week again. And it really drives the mortgage applications go up dramatically when those headlines hit, and correct me if I'm wrong.
Yes.
So we're seeing the demand because these headlines they're getting buyers. It's a psychological, mortgage interest rates finally in the fives. It's at a 5.9, right? But it's still in the fives. And it's definitely I'm seeing it in the marketplace. Buyers are getting off the sidelines. So they're definitely active. I will say though that they're still cautious. The buyers are still being pretty cautious. So Doesn't mean that we can go back to our 2021 pricing. I think the sellers still have to price correctly. I mentioned, I think 2 weeks ago, I'm still seeing a lot of multiple offers on my own listings because we price them well and we price them competitively. The 2021 frenzy, it's not here, like, it's not here yet. It could be maybe with if the depending on what rates do, but we're really focused on the fundamentals, which is presentation, exposure, and pricing. So when we list a house, it's all about pricing, presentation, exposure. And I think nationally, I think there's a psychology shift that's happening right now. I think consumer confidence is improving. So you couple those headlines, rates are finally in the fives, along with consumer confidence improving, at least on a national level. I think consumer confidence is improving. Would you agree, John?
Yeah, I mean, the numbers are coming out backing that too. While on the producer side, it went the other way this morning, but the consumer confidence levels are going up. So I think it's just getting past that hurdle while more people are coming out, they're getting excited, that buyer demand is there. As you mentioned, there's still a little hesitation though, because I mean, what happens when you go to the grocery store still? The gas pump's getting better, but the inflation factor isn't, in my opinion, as low as the numbers show us from the consumer standpoint on the outgoing expenditures and bills. So that's why there's still a little bit of that hesitation, even as rates do come down.
Yeah, so let's kind of wrap this up with the expectations for the spring market. I'll let you go first, John. What do you think?
Well, I think we are going to see interest rates continue to come down, which is going to bring up the buyer demand, of course, as we keep hitting on. But I'm starting to think that we may not have the numbers that are usually going to correlate that to that, like the data. Today's a great example, but I'm honestly really loving that the market's fighting it. You know, it's not just data driven, kicking this 10-year treasury yield down. I'm looking at the mortgage backed security market up 8 ticks today. So I feel like it's going to be a really critical next 2 to 4 weeks to feel out, is this going to drive down? Because the feds might take this data and kick out their projections and forecasts on reducing rates. But if we can overpower that and they keep going down without Fed rate cuts, I think that's going to be really healthy for the market overall.
Yeah, totally agree. Totally agree. I think spring market, I would expect steady activity. I don't think like I said, I don't think explosive like 2021, but steady. I think there's going to be strength in the market. I would expect serious buyers to move before rates move again. And I think that's again consumer confidence, and also I think, buyers that are being educated maybe by their agent or their mortgage lender, they're being told to get out before the rates drift lower so that you can get a better price on the house. So I expect the serious buyers to move even before we see a lower rate. If it does drift lower, the demand's obviously going to accelerate quite a bit depending on the rate, how much the cut goes, right? If the rates stay flat, I think we kind of just stay in this disciplined market. I call this market that we're in currently a disciplined market. The serious buyers are there, but they're being cautious. They're not they're definitely staying disciplined, and they're not jumping or they're not reacting, right? So I think bottom line, it's I don't know. It's definitely not a crash. I think it's a disciplined market, a thinking market. And I think a thinking market, it rewards prepared buyers and realistic sellers ultimately.
Yeah, I agree with you there. I mean, you're seeing what we didn't see when things started to go down in 2021, where there was franticness. Now people were prepared coming off of that and understand you got to be disciplined, you got to be prepared. And those are the buyers and sellers that win. If and when they go down further and everyone starts to panic, that's when we see that pent up demand. And those who weren't prepared, they're getting caught in a trick bag there. And that ticket price is just possibly going to go up and up, but not
Yeah.
yet.
Yeah. Thinking market, prepared market, disciplined market.
Yeah,
That's 3 things to remember. If you got anything out of watching this video, I think that's, those are the 3 things to remember. John, again, I appreciate you, man. Have a fantastic weekend, and I'll see you in 2 weeks.
sounds great. Thanks for having me as always, Ben.